Centuria Capital is an ASX-listed diversified funds manager with $1.6 billion in funds under management. I'm Carolyn Herbert, and joining me at the CEO sessions in Sydney is the company's Group CEO, John McBain. John, welcome to FNN.
Thank you for having me, Carolyn.
Now, can you start by giving us an introduction to Centuria Capital?
Sure. So Centuria Capital, our ticker is CNI. We were listed on the ASX in 2002. We're a specialist investment manager, and we have two core divisions, property funds management and investment bond management.
The company's released its full year results for FY2015. What were the highlights?
Yeah, so we had a pretty exciting FY15. We released a lot of capital and sold two non-core divisions, which has enabled us to focus back on those core divisions. Pretty good results for the year, around about a 6.5% increase in underlying NPAT, and a very healthy increase in dividend.
And John, what was the full year dividend and the total shareholder return for FY2015?
So we released a 4.75 cent per security fully franked dividend, which was up from 2 3/4 cents the previous period. Fully franked, as I said, which led for total shareholder returns in the FY15 period of just under 23%.
And John, now to the property funds management business. How much do you have under management and how much is listed?
So currently we're settling the acquisition of a $86 million acquisition in St Leonard, Sydney. It will give us a total property funds management of $1 billion, of which $375 million sits in our listed vehicle.
And what's the mix and where are they located?
So in the listed portfolio, they're 80% office and 20% industrial, and they're located throughout New South Wales, ACT, Queensland and South Australia.
And now to the unlisted portfolio. What's the size and what transactions have you undertaken?
So post the transaction we just discussed, unlisted will comprise about $630 million of the $1 billion portfolio, and the average size of transactions would be in the $40 to $100 million range. Recent transactions would include the completion of the $220 million Channel 7 headquarters at Everleigh in Sydney, which was massively oversubscribed. But we have several other transactions which Sydney viewers would recognise, including 10 Spring Street for $91 million, 175 Castlereagh Street for $58 million, and many, many others.
And what's the strategy with the unlisted property portfolio?
So I think we'll continue to focus equally on listed and unlisted property funds management. The unlisted property funds management got a pretty deep 20-year history, so a lot of property resource and skill we can bring to bear on acquisitions and disposals. We've made some excellent profits for our investor base. It's got a very loyal investor base, as I said, built up over 20 years. So we have a luxury of being able to distribute the equity and gain the equity more easily than a lot of other groups. The listed property fund commenced in 2014, and it's really only had a year to grow. And I think you'll see it's got excellent leadership, and I think you'll see that grow strongly.
And now to the investment bonds business. Can you tell us about the bonds offering, the size of the portfolio and the strategy there?
So the investment bond business is born out of the original Friendly Society business that was the base vehicle for the whole listing before property became part of it. Investment bond size at the moment is just over $700 million, and we're anticipating funds under management to grow quite strongly this year. We just recruited an excellent head of the investment bond division, Neil Rogan, an ex-AMP head of marketing and campaigns, and he's got quite a clear strategy to grow the funds under management.
And finally, John, what's your outlook for FY2016, and where are you hoping the company's going to be 12 months from now?
I think you'll see more of the same from a very strong performance from the property funds management unit. So both from the existing unlisted unit, which we know has got a lot of acquisitions in its pipeline, and also acquisition and disposal fees that we've already pretty well taken into account. Secondly, you'll see the listed property funds management unit start to really grow in size, and rather than the fluctuations we get sometimes with our unlisted business, as we take opportunities to take big profits for our investors, you'll see the FUM of the listed business just grow steadily. On the investment bond side, we're very excited because its total FUM has really remained the same for the past 2 or 3 periods. But now with talk of changes to superannuation, it's probably the only government tax incentivised long-term savings vehicle left in the country. We've got the right guy running the division, and you'll see that division go into growth. And I think you'll get, our belief is you'll get quite a lot of the market looking quite closely at that. And finally, the dividend side of the story, both the board and senior management is well recorded in the market. We see our obligation to return strong, growing and reliable dividends, fully franked dividends to our shareholders, probably more than most companies our size.
John, thanks for the update on Centuria Capital.
Thanks for having me.